Joining us now to discuss, Collin Roche, the co-CEO at GTCR. Collin, welcome. So first on this deal, 4 years ago, Fidelity National paid $43 billion for Worldpay. You're now getting your stake at an $18.5 billion valuation, a lot less. Why do you think Worldpay won't continue to get beaten by other payments players? Why is it a good investment here?
Well, thanks for having me on the show today, John. Worldpay is a great business, and we believe that this business will just perform better as an independent company. The agility, the innovation that comes from being an independent company is something we intend to exploit. The team there is excellent, but Charles Drucker, who formerly built the business to that state, to the sale to FIS, he's coming back in. We're excited about his leadership. We're excited about backing him and also partnering with FIS as a co-shareholder.
Tell us about what it takes to put together a deal of this size at this particular point where capital is at a premium and there isn't a lot of money, as much at least, money to go around for these big deals.
Yeah. Well, it takes an army. It takes an army of people who are committed and focused and believe. And we're very fortunate that a good number of banks lined up with us to support our bid. Certainly Charles and his leadership and the team at the company, their enthusiasm for this transaction. Lots of work came together. I would say, to your point on financing, this is the right kind of deal for this market. As you know, there were a number of transactions in the debt markets that really struggled, often very high leverage or very tough free cash flow coverages. Rates went up, and a bunch of those deals really didn't perform very well. Some banks took some losses. On the other hand, this is a highly recurring business, and the leverage we're using is very moderate. So we think the combination of a scale recurring business with moderate leverage is something that should be very attractive in the debt market.
So, Collin, as somebody who's done a lot of deals over the years and seen a lot of economic cycles, then the enthusiasm, as you just put it, for this transaction from the large banks that are stepping in to extend loans, is this a one-off, or does it perhaps mark an inflection point for what we're seeing more broadly when it comes to lending right now?
Thanks, Morgan. I think it's a little bit of both. I do think that there's a resurgence of interest in financing the right kind of deals. As you would probably know, some of the prior deals were just written in a different environment, much more ebullient sense of where the economy was going. Now there's some economic overhang and much, much higher interest rates that come almost close to doubling your interest costs for debt. So taking less debt is a better answer today. The commitments you're going to see are going to have less leverage, better free cash flow coverage for the interest rate environment that we're in today versus where we were 18 months ago.
Does that mean that you see other opportunities?
We do. And we're willing to put a little bit more equity in to support that. We'd rather do the right deals now in this valuation environment when we have conviction. And that may mean less leverage. But if we do our job the right way, we take advantage of an environment where things are a little bit softer.
So, Collin, on the fintech space overall, give us your take on where we've just most recently been, where there was a lot of talk about crypto and NFTs, blockchain, et cetera, as defining fintech. To now, it seems like the conversation is taking on at least a slightly different tone about what technology really matters. So whether it's consumer, whether it's SMB, enterprise, how do you see that playing out from here?
I think it's about the fundamentals of delivering commerce. If you're a small merchant all the way through the very largest merchants, you want to deliver seamlessly in a digital environment. You want to manage fraud. You want to manage abandonment. And you want to process transactions in a way that is a good experience for your consumer. So that's bringing together software. That's bringing together security, anti-fraud technologies, and other capabilities. That's what this business does and does very well.